Hello, my name is Brad Lingo. I'm the CEO of Armour Energy, and it's my pleasure to bring our story to the Noosa Mining Conference. Now, a little bit of administration. Here's our compliance statement. Please take note of that, and to keep the lawyers happy. Our story really is about Armour being primed for growth and focused on delivery. We've got a vast prospective acre position and proven fairways. Most of which is held on a majority basis and operated by Armour. Deep multi-TCF resource project and prospects pipeline. We have material reserves with growth from overlooked pay. We've got long life production assets with near-term growth and activity going on right now. And we're an operator of significant infrastructure and capacity, so that in our Surat Basin assets we can bring that quickly to market, and we have those well-established pathways to market, and we have very clear priorities, and we're focused on delivery. Now, looking at our portfolio, we have 4 core areas. I'm going to talk about 3 of them today. Our core reserve and production assets in the Surat Basin, centered around the Kincora gas plant and Kincora gas fields, along with the Newstead Gas Storage project. Our very material position in the northern basins, both in the McArthur Basin, where we're 100% owner and operator of one of the largest acreage positions in the Northern Territory, and our joint venture position in the South Nicholson Basin in northwest Queensland, where we're joint ventured with Santos and with 30% interest and a free carry on a $65 million 4-year work program. And our newly acquired position in the Cooper Basin, which is one of the most material positions in the South Australian Cooper, with the recently announced acquisition by Beach of Senex's Cooper Basin assets. Armour will be the 3rd largest operated exploration acreage holder in the South Australian Cooper. Now, quick corporate snapshot. Market cap just under $50 million. We have proved and probable sales gas reserves of just tad over 150 petajoules, with 1.4 million barrels of liquids along with that, but a very prospective resource pipeline in the northern basins with over 41.5 TCF of best estimate prospective resources. Our share price has been performing strongly over the last 6 months, up over 100%, following our recent capital raising. Our story is really about having the right assets in the right locations, and it's all about market assets and having reserves and prospective resources in the right locations, proximate to the right infrastructure to access those premium eastern gas markets. Our growth strategy has been quite clear since 2015 with the acquisition of the Kincora gas project. We've successfully completed the first 2 phases of that from 2015 to 2017. We're partially through phase 3 and well and truly kicked into phase 4. Now, our priorities in being focused on delivery. First and foremost, priority number 1 is to increase our sales gas production in the Surat Basin by another 4 to 6 terajoules a day through our current development work program, and deliver that on time and on budget. The objective of that is to generate sufficient free cash flow to cover all of our operating and corporate costs and provide reinvestment capital for further development and exploration. Priority number 2 is to bring in a joint venture partner into our Northern Territory McArthur Basin project. Priority 3 is to extract value through commercialization of underutilized assets, such as our Newstead Gas Storage project. And ultimately, with all pointing to priority number 4 is to materially reduce our current approximate $51 million debt position, so that we emerge with a strengthened, unencumbered balance sheet, allowing maximum capital and business flexibility, so that we can deliver priority number 5 is consolidation our core operating focus areas and projects and rationalize non-core assets, so that we can really focus our work programs, our people resources, and our capital on high return, high growth opportunities. Now, focusing on our position in the Surat Basin, Armour has 100% owner-operator of the Kincora gas project. Material sales gas reserves of over 150 petajoules, 2P, and on a 3P basis, 321 petajoules. We have a large uncontracted gas position, and we've got material appraisal and development projects, and as well as transformational exploration opportunities. Now, looking at that development program, we're right in that development program right now. We have a two-stage multi-well hydraulic stimulation program. We're in the first stage, working on the first 3 wells. We've successfully hydraulically stimulated the Horseshoe 4 well, which is in cleanup. We've also now just completed the successful stimulation of the Horseshoe 2 well, which will be returning to cleanup, and moving on to the Maroon 1 well. With those 3 wells, we're targeting 4 to 5 terajoules a day of additional gas production, but we also have a second 3 wells that we're already focused on that were originally planned for the June quarter, and we're working hard to bring those forward into the March quarter next year. We've got a significant development and infill drilling program and a very big catalog of follow-on activity in the Surat in terms of development to deliver increased production and increased cash flow. In terms of that exploration potential, there's a big multi-TCF tight wet gas fairway in the eastern portion of our acreage, down dip from our Mile Creek gas production asset, which we're very focused on moving into over the next 12 to 24 months. I mentioned the Newstead Gas Storage project. It's quite material. It's a unique asset, and Armour is quite intent on bringing that gas storage asset, proven gas storage asset, back into operation and finding a storage partner to work with us on that project. We look at it as a hidden gem. In terms of the Northern Basin, in the McArthur Basin, Armour is 100% owner and operator, 89,000 square kilometers, both conventional and unconventional plays. In terms of prospective resource, 4.9 TCF of conventional prospective resource in the Coxgo Dolomite along the Batten Fault Zone, and then our unconventional prospective resources of over 30 TCF. In the ISA Super Basin, that's where we're joint venture with Santos on that $65 million carried work program. In terms of that conventional fairway, we have existing discoveries, and we're very intent on advancing those and applying for retention and production licenses. It is relatively low drilling cost with 5 discoveries out of 6 wells in the area, and we've got a large catalog of follow-on drilling targets that we want to get into with a joint venture partner. In terms of the Cooper, as I mentioned, Armour is 100% owner-operator after acquiring substantial acreage positions from Oilex and Cenex, making us currently the 4th largest acreage position holder in the South Australian Cooper Basin, and with Beach's acquisition of the remainder of Cenex's Cooper assets, we'll move into position number 3. Very much focused on conventional Jurassic oil targets and Permian wet gas. Now, in terms of our forward programs, we've very clearly laid those out for the Surat, the Northern Basins, and the Cooper, and that's well and truly what we're focused on, delivering both a on time and on budget, a measure twice, cut once, and a commitment to quality execution. So our message is we're primed for growth and focused on delivery. Vast acreage position, deep multi-TCF pipeline, material reserves with growth, long life production. We're an operator of significant infrastructure, well-established pathways to premium markets, and clear priorities and focused on delivery. Thank you very much for your time, and I look forward to presenting again at the Noosa Mining Conference.